To see people joining in. Welcome, everyone. We currently have more than 50 people waiting in the lobby, and more will be joining in shortly as well. This masterclass, we have over 180 signups total. So it's great to see all the enthusiasm and all the interest from all of you guys at home. I would like to give you or give a warm welcome to this free masterclass brought to you by Beecon Elite. Today's masterclass is a special one. First and foremost, we have Steen Jakobsen joining in on the call and sharing some of his knowledge and interest in cryptocurrency and blockchain. But it's also special because we have a sponsor for today's masterclass. Today's masterclass sponsor is Saxo Bank. And at the end of this masterclass, we will have a quick message from our sponsor. But before we dive into what we're going to discuss tonight, I would love to hear where you guys are tuning in from. So please drop a comment and say where in the country are you joining in from. Are you from Denmark or outside of Denmark? And maybe also a short word about what you do for a living. Are you a student or are you working professional? Where are you in life? I've really been looking forward to this month's masterclass, and I hope you have as well. Today's masterclass will consist of two sections of roughly 30 minutes each. In the first 30 to 40 minutes, we will dive into today's topic. And in the last 15 to 30 minutes, we will open up the conversation for an open Q&A session where you will be able to ask your own questions directly to Steen. I recommend you to grab a notepad and a pen and write down your questions along the way. I'm sure you will have a lot, and we'll try to answer as many as possible, but it'll be a good thing to write them down. We'll try to answer all of them in the end of the Q&A session. But before I introduce tonight's masterclass speaker, I would love to give a quick introduction to Beecon Elite, who I represent as the co-founder and CEO. Beecon Elite is a talent incubator for founders, entrepreneurs, and the most talented people out there. Our members and the people we work with all have one thing in common, and it's that they want to get ahead in life, both professionally and personally, and they want to do it really, really fast. We recognize that being young and ambitious can be really, really difficult when, first and foremost, you don't have the right network. Secondly, you don't have access to the right sparring with the most successful people, and you don't spar with like-minded, ambitious, and talented people. So that's what we try to give you here, both in our online free masterclass series, but also in our network where you can join Beecon Elite as a circle member and spar with groups of people all around Denmark. Each month, we invite some of the most talented and inspiring business leaders, such as Steen, to the stage here in our free masterclass series to discuss topics such as career, investing, entrepreneurship, finance, and much, much more. Today, we will dive into a topic that I think is really, really interesting. And there's been a lot of hype and a lot of media and press on this topic lately. And in the past year and a half, it's gone crazy. And I'm sure you have a lot in your mind and a lot of thoughts and experiences you can share today on this topic, Steen. Because we will dive into cryptocurrency and blockchain, as well as the future trends and the outlook of the technology and the use cases for it in today's society. A quick word about our speaker today. Steen first joined Saxo Bank in 2000 and has served both as the chief economist and the chief investment officer since 2009. He focuses on delivering asset allocation strategies and analyses of the overall macroeconomic and political landscape as defined by fundamentals, market sentiment, and technical developments in charts. He has more than 25 years of experience within the fields of trading and investment, and Steen is really highly renowned and a respected chief economist and you appear a lot on the media as well, Steen. Please give him a warm welcome in the chat, and I will give you the word to you, Steen.
Thank you very much. You have scared the shit out of me. I'm not young. I'm not ambitious. I am over the age of 40, so I'm totally disqualified from actually talking about this specific subject that we've chosen today. And now you tell me the only reason I've been invited is that Saxo is the sponsor. So if
No.
that is not, so if that's not an obstacle in itself, I don't know. It's going to be uphill for me all through this conversation. The advantages I do have is very small, but it is that number one, of course, I represent one of the few institutions in Scandinavia that actually allows the trading of crypto for not only Danish clients, of course, but also international clients. I can tell you as a framework for what we discussed today that the fastest growing asset class we have inside the hood of Saxo is actually the crypto space as such. And this is despite, to be honest, that we are not a fully fledged cold storage institution, but we treat it as we think is and what we do best as a foreign exchange component, almost where the mortgage requirement and everything else follows sort of the standardized rules. But despite this, we've had and led by my good colleague Mr. Steen. He's been pushing this agenda, and it's been a very successful launch for us. I, of course, follow the international conversation, and to be honest, I'm invited almost daily to go up against Jyske Bank and Danske Bank and everybody else who continues to deem this the biggest conspiracy in history, if not a Ponzi scheme which have the value of zero. To be honest, if you are looking for this presentation to give you the fair value of Bitcoin, it's not going to be this presentation. I am absolutely aware of the fact that I have zero ability to put a price on it. But having said that, I, in my advisory role as a portfolio allocator, has, for purpose of disclaiming, been long since 2020. And I'm using it in what is called my 100-year portfolio, which really is a portfolio that is trying to cater for the next 100 years. So more in the family office long-term perspective. And in that portfolio, I have an allocation of 7%, which, relatively to the institutional space, is a large portion. Maybe I should just talk and address the fact why I'm, as an old geezer, actually have an interest in this. And it actually comes from my perspective, not of understanding the technology or even pretending to understand it, but simply because that if you offer me 100% volatility, then I am, I think, good enough. One of the few things I do well. I'm good enough as a trader to actually extract some value from 100% volatility if I do it in a very disciplined and organized way. In other words, it is very difficult to run an international portfolio that is competitive today without having this additional asset class, which is called crypto. Of course, a number of people, in particularly in the narrow-minded views of Denmark, will have the view that crypto in itself is not an asset class. But to go directly to that point, late last year, we had the opportunity to sit down with Kathy Woods of ARK Investments Funds, and Peter Gondry and I, our equity analyst, had this conversation with her. And during this conversation, she made a very valid point on the overall structure of crypto as a asset class. She said, listen, you have to remember in the 1970s, no one had real estate in that portfolio because real estate were not seen as an asset class. Of course, everyone adapted that real estate portfolio. And today it consists in many portfolios, especially family office, more than 50% of the portfolio. In the 1980s, no one had hedge funds. In the 1990s, no one had private equity and venture funds. And in the 2000s, of course, we moved to more standardized ETF products. So in other words, there is a constant evolution on what is defined as an asset class. And what really dictates the value and the usability of this space is not what people intellectually think. It's not what Nadim Taleb thinks it's a Ponzi scheme, or whether Kathy Wood thinks it's worth 500,000. It's actually usability and practicality of creating and extracting and harvesting some of what goes on here. But let's move to the actual presentation with that short introduction. And I should say that I should originally have been joined by my crypto analyst, Eberhardt. He's now left it for me to be the presenter of this conversation. So let's go right at it. I think it's important to understand from a theoretical point of view, what you really need to understand on crypto is that what gives it intrinsic value is two things: the amount of energy consumed, and most importantly, of course, the network effect. The network effect is exactly what we see in internet, in music sharing and the likes. But it is the network effect that creates it. So the bigger the network, the more control, the more value you have in the overall value of it. That's also why, even by sort of scientific measurement, cryptocurrencies cannot be worth zero, because basically they have a use of energy that goes into them that in itself, the confirmation process in itself have a intrinsic value. Whether that intrinsic value is $10 or $500,000 at the other end, I'm not going to be the person to address, but it's pretty important to understand that the network effect is what drives the value of it. And ultimately the network effect needs, in my opinion, and I'll address that later in the conversation, needs to distinguish between speculative and commercial use of the same. If we look at the evolution, the recent evolution of the crypto and blockchain space, then I think what is just described, as you can see in the right-hand side, the network effect, we have regulation coming in right now. I think for most of us, regulation is a good thing because it will level the playing field. It will take some of the offline ways of trading this into a more organized way of doing it. But of course, against this sits the central bank digital currency, a number of people who question the validity of off balance sheet, off the grid cryptocurrencies and blockchain, of course, will argue that in the history of money printing, it's never been allowed for non-governmental player to play in this field. I happen to think that it's somewhere between black and white or hot and cold in this circumstance, because of course, as someone like China, the PBOC, the central bank of China, is now moving to an agenda which is almost effectively a digital currency only, no cash is exchanged in hands. They will need to use some of the off balance sheet and products already being developed for the crypto space. The major issues we have today is really scalability in the sense that the amount of transaction that is done and can be done on both Bitcoin and Ethereum in particular are very, very limited to something comparable like Visa. And then, of course, the new technology means that we are seeing first iteration, second iteration, and third generation cryptocurrencies today that all addresses and try to address regulation, scalability, and the technology and environmental damage that we see to it. But what is absolutely clear is that we are dealing and have seen a massive institutional adoption. And if you think institutional adoption is sort of a buzzword for anything, it is really the network effect. If all the institutional money in the world had, for argument's sake, 1% in cryptocurrency, the value of crypto would probably triple or quadruple over a short period of time. So institutional adoption is important because, as this slide is also saying, institutional sits right opposite the governmental alternative, which is a centralized digital currency. If we look at the different iterations and sort of the names that we've seen thrown around again and again in this marketplace, then a lot of people talk about the store of value. Of course, Bitcoin in a classic sort of academic sense is a limited supply. The limited supply makes it scarce, and the scarcity of this makes it in citation mark, a perfect forum, a perfect vehicle to create store of value. There is increasingly some signs that Ethereum can take that same role. I'll talk about that in terms of Ethereum 2.0. But what is the difference between Bitcoin and Ethereum is that Bitcoin was almost entirely born as a transactional currency, a validation of transactions. it is super inefficient in doing transaction. It will, in my opinion, never be able to actually live up to the transaction standard, which is that it's low energy consuming, it's scalable, and of course, it technology-wise needs to develop. So Bitcoin is the first iteration. It is the grand scale. It is the marquee name in this business that we talk about. Ethereum, of course, with the smart contract, is the second generation. And then we move into the more newer names, the smart contracts, the Cardanos, the Solano, the Binance Chains, and Polkadot, which all have not only great white papers on it, but also have a technology edge, they claim, relative to the rest. And on top of this, we see, and this is, of course, the new breed, and what you young people are far better versed in than I am, but the decentralized application, Uniswap, Compound Chainlink, OpenSea in the NFT space, DYDX, and the like. So we are in a situation right now, and I think, for the record, I think 22 and 23 will be a crossroad for this industry. And when I say this industry, I mean both the crypto, but more important, the blockchain. But I'll address that issue coming up. If we look at the focus on institutional adoption, you all know JP Morgan, Fidelity, Visa, Standard Chartered, the PayPal, and the likes has been adopting this technology. And I can say to you, as someone who talks and advises upon thousands of people on a daily basis, that the standard question I'm getting now, which wasn't there 5 years ago, of course, is what kind of allocation do we need to crypto? Do we believe in it? Do we not believe in it? What is the way to access it? What is the safer way to do it? And how do we get the upside? And how do we manage the volatility? So the institutional adoption, in my opinion, I think, unfortunately, a place like Denmark is extremely slow on the uptake, not from you younger people, but from the institutional side, the banking side. Today, you're not allowed to trade with, I think, the 5 major banks in Denmark doesn't even allow the access to this. Privately, I cannot hold an account with Danske or Nykredit where I can actually trade this, but the rest of the world don't seem to matter. The most important macro figures in the world, the biggest CEOs and banks, the JP Morgan, the Goldman Sachs, are all adopting. When you look at the crypto space, we have a interesting change with the Biden administration, and this is called the new SEC chair. And SEC is the regulatory framework that controls the market in the U.S. And this gentleman is not only very versed in this, but as far as I know, he has been actually having a course on MIT on crypto and blockchain. So this is someone who knows this from the inside, and it's probably someone who doesn't want to be seen as someone who is just without any drawback is supporting it. Whatever happens, kind of a case, but at least you have someone on the inside at the SEC, Gensler, his name, Gary Gensler, who will be looking towards a compromise somewhere between what the industry wants and what the legacy banks and the legacy regulators wants to do. I expect that the know your clients, KYC, as we call it in the banking, will be an absolute crucial part of the new generation of cryptocurrencies that we see and who will be born. The scalability issues is something I mentioned a few times here, put in context by Mass. As you can see, that transaction per day that you can do in Bitcoin is something like 268,000. In Ethereum, you have 1.2, and in other scale versions, third generation, you can actually operate inside significant higher numbers than this in scalability. Then what is really, and let me pause here for 2 seconds. One of the biggest sort of technology calls we stand behind in Saxo right now is that 22 and 23 can be a game changer. What we see changing is that if you look at the crucial problem, the crucial issue of blockchain as a technology, it is the lack of user cases. The user cases means that the amount of nodes, the amount of people working on and developing a new application to sit on top of a specific blockchain technology has been very limited. It's a little bit like, if I may use the analogy, probably not something for you young people to understand, but when the first Nokia phone came out, someone like me was very excited. It was a flip phone. It was small. I could do SMS texting, and that was pretty much what it could do. That's where the crypto and the blockchain technology sits today. of course, fast forward to what I want to use this analogy for, of course, is that if you look at an iPhone today or a Samsung phone, of course, you have thousand upon thousand of people developing and accessing apps that can be used by multiple users. So you are not domain dominant. You are working on an open source, open technology. And that is what we see happening inside this space. And I think the early signs in 2021, of course, was that we saw this NFT sales explode. We've seen a number of platforms come up on this platform. But if you think about the amount of users, and if you want to create, in a perfect world, a blockchain, and on top of that blockchain, a user case that will be fruitful and constructive, it would be to see the music industry, the gaming industry, and the art industry move to this platform. And that is exactly what has happened. The ability to understand non-fungible token and the likes, of course, is for someone like me very difficult. But what we see happening is that a number of artists, a number of people are moving their whole revenue stream from one where they use in music, Spotify, and instead start using an applications that sits on top of the blockchain. So their users, the million upon million of people who follows these different artists, is now only going to access the music, but also gaming and clothing and other things that you can do. The NBA, the National Basketball Association in the US, is also now sort of giving you ability to buy your favorite team's favorite dunk as a picture and image and NFT and the likes. And we see that development, pardon me, as being a massively increasing as we talk. The number of users in this space is absolutely exponentially growing. Just to show some of these, of course, OpenSea is one of the biggest NFTs, if not the biggest NFTs. You have audios in terms of the new Spotify on blockchain, and as it says here by Matt and Mess, I know Kate Perry, but Jason Derulo and Stephen Aoki is not exactly people I know, but I'm sure you know them. But if you look at these artists, what they're doing is they're turning the earnings model upside down. When you look at the music industry, Spotify's plus the record companies, they take home about 90% of the earnings of artists. Now these same artists can go to a service like Audios, and they can retain 90% of their earnings and 10% for upstreaming this on a blockchain. This changes the ability of people who can actually work with art as a professional service, but it also changes the agenda in terms of what is available inside this space. And that's why we think that 22-23 on the NFT space as a leader can generate not only the support for blockchain, but also overall for a fast growing environment where we will see classic disruption of streaming services and people who's been having unusually large profit. And just to show you that it's actually already actionable today, I put in a few slides here, Audio's space, which you can see the link for in the bottom. You can already unleash your music on that. So it's live, it's going on. And here you have some of the NFTs. In this case, it's crypto.com, Matt Damon being the profile figure for that one, but of course OpenSea, which is by far the biggest, and that is just exploding. When I look around the trading floor, Saxo, a lot of the young people who sits around on the trading desk are more concerned about NFTs and trading in those than they are trading the next Novo equity. If we look at the market, it is, of course, extremely distributed across the terms total valuation. Bitcoin is still very much the leader in terms of market capitalization, but the gap between Bitcoin and Ethereum is closing very, very fast. The reason it's closing is, I think, in my opinion, that the smart contracts and the usability on NFTs is actually closing that window, because you cannot do NFT right now as it is on Bitcoin, but you can do it on Ethereum. And Ethereum has become the go-to. It's the second biggest brand in the business. And as such, it is attracting the amount of business that you have right now. And throughout 21, you saw the close in valuation, but also in the usage between those two was increasingly going towards and favoring Ethereum. Okay, and let me just stress right away, Ethereum for me is not the end game or the big winner. I'm just saying what is actually going on in the marketplace. And here you see a little bit of the Bitcoin, the dominance they used to have from all over 80%, of course, and this this is a classic evolution of market. It is that if there is a significant high amount of profit, then the barrier to entry for anyone else to come into the market decreases. And of course, that decreases overall what we economists call the market concentration. This is only natural in the way it is conducted and done. But of course, the rise that you see in the bottom part is Ethereum as a big winner. But I also think that if you want to be ESG compliant, blah, 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 then of course you're into Cardano or Polkadot and the likes. What is coming up in 2022, of course, is also Ethereum 2.0. In Mass's words, these, of course, move from a proof of work to proof of stake. And that in itself, and the way you conduct all this business will reduce the energy consumption by close to 99%, or you will be 2,000 times more energy efficient. But what is really important for someone who, like me, look for commercial angles, the transaction volume will go from 5 transactions a second to over thousands. And of course, you will also see, and this is important because of the stores of value, that the Ether issuance will drop from 15,000 K a day to 1.5 K. Mass and the younger people in our group really think this is and could potentially be one of the biggest interesting development that we see, that Ethereum is now addressing the scalability and addressing the energy consumption to be more compliant with the overall thinking in the market. In terms of the competition here, it is, of course, the central bank digital currencies. Here is a map of countries and how far they've gotten on this. China is by far the one which is the furthest. The Chinese authority, anyone who's traveled in China will know that cash has been useless to use over the last 5 years. And of course, with a centralized autocratic system, China is very well versed and able to actually transact this. From an economist point of view, one of the reasons why the digital currencies is interesting for central banks, of course, in a negative interest rate environment, is that if you have negative interest rate and cash in a society, you will have a lower boundary by which you cannot go under in terms of negative interest rate. Just imagine that in Denmark, we will start to charge 2% negative interest rates on your deposits. That will mean that basically everyone will try to get as much cash as possible and put it under the pillow and do cash transaction. We will simply stop depositing money at the bank. If you have a digital currency only, of course, you can go to infinite negative interest rates. I happen to think that 22 overall as a macro world is actually a year where interest rate will go up. We will again in Denmark move to positive interest rate. But it's very interesting that a lot of the intellectual and practical reasons why central banks are interested in digital currencies is actually this ability to go very negative on interest rates. So if we look at the key elements to trading crypto for us, you can make a vague and very, in my opinion, vague argument that this is a hedge against the future. You're basically saying that, as an asset allocator like me, you're saying, okay, crypto space is a space where the under 40s have an ability to become rich. The under 40s have a better belief and a higher confirmation trust in a decentralized ledger than they have in governments and fiat money. I think to some extent that is it is probably right that it is one of the few asset classes out there where you have the ability to catch up to the to my generation who benefited from low inflation and low interest rate throughout our careers. But I think as a trader, for me, it is the optionality I talked on before. The fact that if I have a 7% allocation to cryptocurrency, I can lose 7%, but my upside is infinite. And in particular, if I manage that 100% volatility, which I do in my model through rebalancing every month back to 7%. So in a month, just for argument's sake, where cryptocurrency doubles in value, my value will go from 7 to 14. Into that month, I sell it down to 7%. And likewise, like this month where crypto is down from 7 to 5%, then of course I buy additional 2%. So I'm always buying the average and I'm playing on selling the higher and buying the low on that distribution. There is also generally what is called West Coast money. There's a whole generation of people basically on the age of 40 who believes, having grown up with Silicon Valley concepts, that technology is a better way to invest your money into the future than putting into bricks and mortars and classic sort of tangible assets. And that's something I fully accept. In Saxo, we have the view that nobody knows the value and nothing is comparable. And the next couple of lines is from Mads. Mads, who's been an insider to this business since he was 13 years old, said the more you know, the less you realize that you don't know. And what he's trying to say is that as someone who's on the inside of trading and the relative value of crypto, he has been totally stunned by the growth in NFTs and what NFTs again can do to the technology overall. It is a highly leveraged market. And as Buffett said, there's only 3 ways you go broke. You read it, because I think it will be incorrect politically to read it aloud. And of course, the final point being that if you want to do this decentralized, then it comes with decentralized risk. If you want to take it off to a USB stick and keep it offline and cold storage and like, you also have a very practical risk to engage in this business. Whereas if you do the ETNs and the more currency like as we do in Saxo, of course, you are just inside the normal realm of the markets. It doesn't mean that our model is better or worse. It just means if you want to do things decentralized, it comes with the decentralized risk, which is that you are not part necessarily of a system that is integrated. Funny comparison here from Matt, of course, that Bitcoin and Ethereum is bigger than JP Morgan in total value. Of course, a slightly unfair comparison, but it's interesting that as a financial assets, that Ethereum and Bitcoin, of course, is bigger than JP Morgan Chase, which is the world's biggest and most powerful valued bank. What is also clear is that, and this correlation metric points out that in terms of market going up and down, you can sit there and you can try to arbitrage. I'm sure a lot of you do. But at the end of the day, the correlation all sits north of 80%, meaning that, you know, whether you buy one or the other is not really relevant. It is the dominant 2 currencies, Bitcoin and Ethereum, that dictates the pace for everything else. And sometimes you have some relative value mix-up that happens. In terms of Bitcoin's correlation to the overall market, you see on the right, Ethereum and Bitcoin correlate to each other. No surprise, but ARK Innovation, which is having at least intellectually a big stake in this, only 0.25, NASDAQ 0.21, and S&P 0.21. These, just for the record, are very low correlations relative to the market. Most assets in the world, which is built on low interest rate, will have a correlation that sits certainly north of 50%, but also north of 70%. In terms of us, just a small commercial for us, we do crypto in the platform of CryptoFX. As you can see, we do the crosses that you can see here. Of course, majority of Litecoin or whatever is not it. It's Ethereum and Bitcoin that it is trading relatively narrow spread comparatively, but not comparatively impressive to me, a foreign exchange trader of 30 years. I find these spread very, very large, and I find the funding and the margin cost, of course, you know, almost punitively expensive for me. Being the old guy, I tend to use the more liquid ETNs and ETF to do it, but of course, you guys are far better and more adaptable to this than I am. And then, of course, and this is where the space where I play in more, it is these crypto trackers, which is very efficient, very safeguarded by basically being listed on exchanges. Majority of these are listed in Switzerland, Amsterdam, and Stockholm, as far as the ones we have here. And then, of course, inside my team, we also have a focus on it. We have Mads Eberhardt as a crypto analyst, but we also run baskets that is catering to and reflecting, in this case, crypto and blockchain. And these are some of the names that you can buy into as equity in terms of getting access to it. And that leaves me at the end of the formal presentations. I know some of you will be disappointed that I'm not a hardcore Bitcoin or Ethereum fan. I am an asset allocator and someone with 30 years of experience. And for me, I think the bottom line here is that if we in 22 and 23 can get a a splitting up of the market in commercial use versus speculative. I think the commercial use will grow significantly, and I think what you need to look out for in terms of this space is how adaptable to regulation, KYC, know your client, scale in terms of environment, and overall technology. Is it adaptable to new and emerging trends like NFTs and off-balance sheet super swaps and the likes? That is what you want to monitor. Of course, the issue and the $1 billion question here, who wins the ultimate race here? No one knows, number one. And number two, I think the ultimate cryptocurrency is not born yet, because I think it will need to encapsulate, it need to incorporate future technology and regulation into the space. But everything was born with that Bitcoin paper many moons ago.